Okay, so what we're going to do now is we're going to talk about two of our specialized journals that we're going to be focusing on. And the first two we're going to focus on is one called cash receipts. So anytime we have cash coming in, we're going to use the cash receipts. So anytime we have cash coming in, it's cash receipts journal. The other one we're going to talk about is the sales journal. The sales journal is used only when there is merchandise being purchased on account. Again, when it's merchandise being purchased on account. Okay? So, for example, here we have sold merchandise on account to Yoko Nakata 500 plus 4% sales tax. Sales slip 220. Okay? So, again, because it's merchandise on account, we know we're coming to the sales journal. So we're going to write 2018, May 1st, sales slip 220. Normally we would write accounts receivable. Alright, for some reason this got deleted. This should say accounts receivable debit. Okay, so normally we would write Yoko Nakata and accounts receivable together, but because we know they're all going to be accounts receivable, we just put the name of the client. It was a total of 500 in sales, so 500 in credit. So again, we no longer list out like we did in general journal. We now see we have a sales column, a sales tax payable column, an accounts receivable column. So we put 500 for sales. There was $20 of sales tax. Okay, so again, two credits, we're going to add them together, means that we are going to charge the client $520 in the accounts receivable. Okay, next we have the cash sales totaled $1,500 plus $60 in sales tax, tape 10. Cash sales totaled means that we are going to the cash receipts journal. Okay, so we're going to put May, 2018, May 3rd. It was tape 10. So we'll do T10. And it was cash sales, so we're just going to write cash sales there. Okay, and then because it's cash sales, 1,500. General credit, we'll explain what that is later in another video. This one we're looking at a sales credit. So we're going to write 1,500, sales tax of 60, okay? And again, every transaction on here is going to have a debit into cash and bank, and it's going to be 1,560 because we had a credit of 1,500 to sales and a credit of 60 to sales tax. Okay, so the 7th, we're looking at just a repeat, but it's 200 in sales and $8 in sales tax. Okay, so we're going to go the 7th, T11, cash sales, 200, $8 in sales tax, giving us cash with intake of $208. Excuse me. Next, we have sold merchandise on account to Heather Sullivan for $100 plus sales tax of $4, sales slip 223. So merchandise on account, sales journal, baby. So we go to the sales journal, 9th, slip 223, and it was to Heather Sullivan, and it was $100, $4 in sales tax, giving her a balance of $104 she owes us. All right, then on the 12th, we had another cash sales, again, cash sales, cash receipts, okay? So 400 plus $16 in sales tax, tape 212. So 12, T12, cash sales, and it was 400 in sales, 1,600 in sales tax, giving us a debit of cash and bank of 416. All right. Then again, sold 3,000 on merchandise on account to Fast Forward Production plus sales tax 120, sales slip 225. All right, so we're going to go to the sales journal. And we're going to put the 15th. It was sales slip 225. It was to Fast Forward Productions. Okay. 3,000 and then 120, so it was 3,000 sales. 120 sales tax, giving us accounts receivable of 3,120. Okay. And the last one was sold merchandise on account to Yoko Nakata, 200 plus sales tax of $8. So we're going to go 18. Sales slip of 226. It was Yoko Nakata for 200. $8, giving her a debt and accounts receivable of 208. All right, and that's how we do transactions for sales journal and cash receipts cash sales journal.